In this presentation, we will record a sales receipt and the related deposit. In other words, we're going to have a sale. We're imagining the sale happening within the store at the check register. We're going to record that sale and then the related deposit that we're going to go to the bank and deposit at the end of the day. Here we go with
9,
Xero.
8, 7, 6, 5.
Here we are in our Get Great Guitars dashboard. We're going to be opening up our reports now. So let's just open up the trial balance this time. We're going to go to the accounting drop down and go on down to our trial balance. Once that opens up, we're going to right click on the tab up top so that we can duplicate it. Up on the tab up top, we're going to right click on it and simply go to the duplication. Now we're going to have our trial balance to the right. We're going to be entering data in the left. Let's take a look at our flow chart. So we're going to go back to QuickBooks Desktop just to look at the flow chart. We're just considering the flow chart over here. We're in the customers section. So we're going to have not an invoice this time. We're imagining kind of we're in the shop. We're in our guitar shop. Someone's coming up with either a guitar or a service within the shop. And therefore, we're going to basically have a sales receipt at that point in time. We're going to put that sales receipt and increase revenue and increasing the cash, but in the holding account, which we will then take and deposit into the bank in the same format in our system as we expect it to appear up here on the bank statement. All right, so let's take a look at it. We're going to again go into our trial balance over here. Let's bring the date on up to the current date we're working in, which is going to be February of 2020. So I'm going to update the trial balance. What's going to be the effect of the sales receipt? It's a fairly long, lot of accounts kind of involved in it, but it's one of those reports that we're going to use a lot. And if it's inventory that we're selling, instead of accounts receivable going up as it would with the invoice, we'll be increasing the cash account. In our case, the clearing account until we go to the bank and enter the full amount into the bank. Other side is going to be on the income statement. If it's going to be inventory, it's going to be increasing the revenue related to merchandise. If it's a service, it would be a service item here. Then the difference, if it's a merchandising account, would be sales tax between the amount of revenue and the amount in the cash. That then go into a payable called sales tax payable. If we're selling inventory, then of course the inventory asset will also be going down, and the related cost of goods sold, the expense for us consuming that inventory, will then be going up, increasing the expense, decreasing the net income by that cost of goods sold. Let's take a look at it. We're going to go back to the trial balance here. We're going to be going to the plus button up top. We're going to say that we are receiving money. So we're imagining we're in the store. Someone's coming up to the front of our store. We're like at the cash register, and we're going to be recording the receipt of some kind of money. Now, I'm not going to put it into the checking account. I'm going to be putting it into the clearing account. We can imagine us getting cash or something like that, and we still have to go to the bank at the end of the day and group all this together. The person that's going to be giving us money is Garcia Guitar, which is a new contact. So we'll set up the new contact here. I'm going to put into the proper month this time because we're working in February. So tomorrow I'll be in February, so it'll pop up February all the time, and I won't mess up as much. But I'm going to go to February 14th. That's the problem with a practice problem, of course, is the date may not be the actual date, and the system's always going to be popping up to the actual date. So then we're going to have the item down below. The item down below is going to be a ELP, one of our most popular brands. I'm just going to be the ELP. That's the Epiphone Les Paul. We sell quite a few of those. And we have one of them that we're going to sell, and the price is going to be $500. There will be sales tax on it, sales tax calculating for us. Let's just review what's going to happen when we record this form. It's going to be increasing the clearing account for cash of the $547.50. Then the other side is going to be going into revenue, $500. That's going to be going to the merchandise sales. The difference between the two, increasing a liability account called sales tax payable, that for the $47.50. Also, inventory is going to be going down, not for any amount that's on this form, but this form driving that, and the system knows what it should be going down by the inventory item. I believe it's going to be like $400. And then the other side of that's going to be going to cost of goods sold. The net effect then on the income statement is the $500 increase minus the cost of goods sold, whatever that is. I think it's going to be $400, resulting in net income increase between the two of the $100. Let's go ahead and save this and see if that is indeed what happens. Saving that, going back on over to the good old trial balance over here. We're going to update that trial balance, so we're working with a report that is up to date. So then we can see within the clearing account, if we go into the clearing account and into that item, we should be seeing this increasing by the full amount. That's going to be the 54750, that including the sales tax. If we go down we see that there it is. All right, back up top, we're then going to go to the sales item, the merchandise sales for the sales that we had related to the inventory because we sold a guitar, which was that ELP guitar. So we're going to go on down, and we're down here in our inventory section of things. That's not where the inventory, here it is. There's the merchandise inventory. Inventory is in the 400 account numbers, or code numbers as they call them. And if we go down to the sales, we should have one at the end of February, this being for the 500, which is the amount we get to keep, the amount that, not including the amount that the state takes from us with a sales tax, and the local government too. You know, they're all in on it, all those local and the state. So then we're going to go back up top and say the difference is going to the sales tax. So the sales tax will be here, so I won't go into it, but it's in there. Also, the inventory is going down, so inventory up top, that will be going down because we sold a guitar, which happened to be one of our most popular ones, that being the ELP, the Epiphone Les Paul, and so it should be decreasing down here by the 400. So there's the 400 decreasing the Epiphone Les Paul. Going back up top, the other side of that's going to be on the cost of goods sold side of things. That's going to be on the income statement and expense related to us consuming the guitar in order to generate revenue. So it's our biggest expense if we're a merchandiser. Going into that, we're going to see the Epiphone Les Paul. Notice that the 400 in here wasn't actually on the sales receipt, but the sales receipt's what's going to be driving that number. So here that is, here's the 400 there, so the cost of goods sold increasing by that 400. Now what we're going to do is we're going to take that deposit we had and all the other stuff that's in this clearing account of the 547 and take it to the bank. We're going to the bank with it now, so it's going to be reducing the clearing account and going into the checking account. So let's go ahead and do that. That's going to include, of course, the current sale and all other sales we have that represent that account represents us holding on to money. We have money that we need to go to the bank with because we shouldn't just be holding on to it like that. So we're going to go to the transfer here and put that into the bank. So it's going to be going out of the clearing account and it's going to be going into the checking account. That's where it needs to be. It's going into the collect checking account. It's going to be for the amount of the 847.5. And so there we have it. Now again, we could put some references in there if we wanted to kind of sum up where that number is coming from, the different transactions that are grouped together to do that. I'm not going to go into that now, but that's it. We did that in the past. It's a decent, good practice to have. So I'm going to go ahead and say transfer that, please. And then we'll go back into the trial balance over here and see if that transfer does indeed do what we expect it to. And down here, once I hit update, I expect this account right there to disappear entirely. It's going to be a magic trick, magic act. So we're going to update, and there it goes. It went away. What happened? It went to 0, so it disappeared on the report. And the other side's going into the checking account. So if we go on into the checking account here, scroll down to the bottom of the checking account, we should have that 847. Hopefully I put the right date in there. I don't remember if I put the right date in there. If I didn't, I'll change the date. There's the 847. I didn't change the date. It's in there as January 31st. I'd like to put it in there in February, so I'm going to adjust that and go back in there. Obviously, if you're working in real time, you'll be hopefully working in the current date and you won't have these kind of date problems that I'm having here. But that practice problems, you're often working in the past or in the future or something. So I'm going to go in and see if we can adjust this. And this transfer is not letting me just go in and basically just change the date. What I'm going to try to do then is remove and redo. So I'm going to try to remove and redo. So it says, are you sure you want to permanently remove this account transactions? Please note the reconciliation. And that's part of the problem because it's a bank reconciliation. They're trying not to allow you to make adjustments to it. And note, you could basically, I might go back and just reverse this with another transaction and then enter it in the proper date as an adjusting entry. So by us going in and kind of changing the date, that's not really the most proper way to do it because you don't have an audit trail to do that. But it's the easiest way to do it. So you have to see which way you want to, how you want to do that. So in any case, I'm going to say, yes, please remove that and see what happens with that. I'm then going to go back into our trial balance and see if that reverts our trial balance back to where we were before. So let's go back to the trial balance and see what we have in there. And I'm going to go back up top and change the date on the TB, the good old trusty trial balance, to February 29th and then update that. So there it is. It looks like it's been successfully reversed. The clearing account has magically reappeared. So let's go ahead and do it again, this time with the proper date. So we've shown you how to reverse an error that was done completely purposely so that we can show you how to reverse the error. So we're going to go back into the transaction. It's going to be coming out of the clearing account, and it's going to be going into the checking account. The amount then of that 847.5, and the date here should be, let's go February 14th. I'm going to say February 14th. All right. Okay, so that looks good. Let's try it again. Transfer this item one more time, last time, because we're going to do it right this time, and then we're going to update the report up top. The clearing account should once again magically disappear. If we then go into the checking account, we should see that increase of the 847.5. The 847.5 now appearing, hopefully, in the February type of transactions, because that's the current period that we are in. So there it is, February 14th. That looks better. So that's it. We're going to go back up to the trial balance. That's it for now. Let's go to the beach.